Jonathan Davis is an economist and podcaster and great friend of the programme. Jonathan, good afternoon to you.
Hi, Rob.
Good afternoon. Is this the way to sell houses now? To put on a video, a song and dance routine?
It's the one house that's been sold using this method, and the story behind this is actually they had such vociferous negative reaction that they actually took it down after a few days. However, one person who'd seen the short video was sufficiently enticed and made the offer and bought the property. So your guess is as good as mine. I'm sure I'd love to see it being tried in the UK. So any estate agents out there, let's give it a go.
Good business, of course, for people who make videos. They can be drafted. Because you can make videos, and people with expensive properties do make videos, of course. But this, you've obviously seen it, Jonathan. The guy, yep. And I know people will get upset because there are different types of relationships. But in this particular story, the man drives home in his white Jaguar sports car. There's this amazing house. Before he gets to the front door, his wife it doesn't happen in my house. His wife opens the door. He scoops her up in his arms, and they then embark on this not steamy but seductive dance routine around the house, well choreographed. And what they're selling, as an expert told me earlier, is not the house. They're selling a lifestyle.
Well, they are indeed, and the selling is the right word here, because houses of a similar ilk in that part of Sydney in Australia, they sell for something like 40% on average less than what this house has apparently sold for. So something has gone very right for the sellers. I hate to think what the buyer is going to be feeling in a year or two's time when he sees how prices are then.
So what are you predicting? Because now I know it's 900 grand. I think if I was living in Australia, I would have snapped it up. Where are prices going then, Jonathan?
Well, in Australia, particularly on the East Coast, so Sydney, Melbourne, etc., they're actually down 10 or 15% prices in the last year or two. Somewhat similar to what we've seen in central London and indeed in the likes of Vancouver, Manhattan, and parts of China. So it's actually a global thing for the higher end properties. As I've said before on your illustrious program, if we are in an era, in other words, many years, of rising, whether gradual or not, rising inflation, which I believe that we are, then we are likely to be in an era of rising interest rates. It's simple mathematics. Higher and higher interest rates over the medium to long term can only translate into falling house prices in the medium to long term.
So if someone wants to sell, is it sooner rather than later, or just hang on to what you've got?
Oh, well, I mean, obviously there are lots of different reasons for why people move homes, but if someone's going to sell anyway, well, we've had the chief economist from the Bank of England, we've had Mark Carney, the governor of the Bank of England, in the last week or two, both of them saying we should expect higher interest rates, something that I've been saying to you and others for the last year or two. I'm forecasting, for what it's worth, that we should expect 2 or 3 raises in interest rates by the end of next year. It doesn't sound much. I mean, that means the base rate goes from 0.75% to 1.25% or 1.5%. And of course, everyone listening now, oh, well, I remember when interest rates and mortgage rates were 10, 12, 15%.
Yeah, well, yes. With tears in our eyes, Jonathan, we remember those days.
But house prices were a fraction of what they are now, and therefore mortgage amounts were a fraction of where they are now. So from 0.75% to, say, 1.25%, 1.5%, that's a doubling in the mortgage cost. Now, I don't know many people are going to see a doubling in their incomes.
But if you've been on the housing ladder for a few years and, you're coming towards the end perhaps of your term, then perhaps not so much of a problem. If you're starting out, you better make a good video.
But it will, higher and higher interest rates, if it happens, and I put it at more than a 50% probability that that's indeed what we're going to see, it will pervade the whole of the housing market. Rising interest rates will mean falling house prices, and that will therefore affect not the people you just said there, but people who have bought in the last few years and the next few years.
Jonathan, always a pleasure. Thank you, sir. Jonathan Davis, economist and podcaster. If you